We got to start with really today in the market. Bad data on retail, oil falling to nearly 20-year lows, and banks continue to drop on their earnings concern. Guy Adami, of those three, because I would argue, and I said on Twitter, I didn't think data mattered at all. Of those three, which one matters the most to you?
I think the fact that oil can't get out of its own way out of those three. I mean, bank earnings and the way that banks have traded, I mean, we could talk about that. But the data we knew was going to be miserable. Maybe it was worse than a lot of people thought. But the fact that, all this bloviating and all this noise surrounding the oil market, and it really can't get out of its own way, and that rally really only lasted a couple days, I think it's somewhat concerning. In terms of the day itself, though, given all those three things, given the run the broader market has had, I don't think today was all that bad. Again, that I think the market's going to pause here and head back lower, but given all the things you just mentioned, it could have been a lot worse today. So you have to take, there's some silver lining on the back of that, I would think.
Yeah, and I don't know who is surprised, Tim, by oil. I mean, the tanks are nearly full. Citigroup and others putting out notes saying basically we're almost out of storage. We could have, much lower prices in the near term, at least for the current month contract. But, with all due respect to the show and the production, I don't know if those three things are enough. I mean, Germany is going to kind of start to slowly reopen its economy on Monday. Are we not paying enough attention to some of the coronavirus-related information?
I think we are, Brian. I think the market is now trying to sort through the macro and the coronavirus. Look, on other days, today's data, first of all, retail sales would have been said, how about the days we shrugged off 6.5 million jobless claims or unemployment numbers that were catastrophic or some of the other data. So retail sales shouldn't matter either. Neither should that home builder index, which was a joke. I've never seen anything go straight down like that. That's worse than the Dragon Coaster at Playland. So if you think about today, Germany announces that they're going to start opening their economy on Monday. If we did this 2 weeks ago, this would be the headline and market would have been up 3 or 4%. So I think the market is a little exhausted here. I don't think you have to read so much into some of today's price action. Guy alluded to the fact that it could have been a lot worse. It opened a lot worse. And if you look at names that have been outperforming and names that people want to own, there's a lot of names across the S&P, but certainly across the Nasdaq 100 that are up on the year. So I think today's macro was horrendous, in line with macro that people said didn't matter on other days. So why should it matter today?
And it didn't seem to, Dan, Nathan, and you guys have been concerned. Obviously, one day doth not a trend make, but at the same time, the markets internally, some of these indexes that we talked about, they looked very weak again today.
Yeah, one of them would be the Russell 2000 small caps. I've said it a few times over the last few weeks. I mean, that to me is probably a far better indication of just the immediate impact to U.S. businesses. When you think about their leverage, you think about what makes up the Russell 2000, heavily exposed to financials and much weaker financial institutions than the ones that are reporting earnings this week, which have been disappointing. We see what the XLF has done this week alone, and that's made up obviously of the major money center banks and investment banks. So when you think of the Russell 2000 down 30% still from the recent highs just a couple months ago, I think that might be telling you a bit more of the story. I'll just make one other point about data. I think it's, I don't love to hear the term that data doesn't matter. Data does matter when it comes to the markets. What's really important is obviously as much visibility as you can get. Every piece of data matters. Every piece of data relative to other data, the historical data, the peer data, the geographic data. So keep consuming it. Keep coming up with adjectives about it. It will help you figure out what's going on, and it will definitely be helpful versus the sentiment that you're seeing in the market, because while the 5 to 10% moves have obviously abated in the major indices, moving around 2 to 3% historically is still a whole heck of a lot. We need to find some sort of trend, whatever the next trend is, and it's only going to come with the data.
Okay, fair enough point. Dan might disagree with my tweet then, Karen, but listen, as a fund manager yourself, are you spending more of your time right now looking at market-related data, or are you spending more of your time related to coronavirus-related? I know that most of my day seems to be spent looking at Johns Hopkins websites now, trying to understand trends of where we may be in a couple of weeks. How about you?
I mean, I agree with that. That's data that I really want to know, coronavirus. But I'm sort of in the last few days in this, okay, we accept that we're getting to the top of the mountain, going down the other side now. And so we turn our attention to, can we open up the economy and how is that going to look? And I think that we don't know what that's going to look like. We don't know. I really am very skeptical about this V-shaped recovery. And I feel like the market has really fully priced in a strong V-shape. And I'm skeptical that that will come to pass. So for me, what I look at is balance sheets first. Who can make it to the other side? Who can survive? And what kind of businesses won't be forever changed? So that's the kind of stuff that I'm looking at. I agree with I agree with Guy and Tim that I didn't think the market was so bad today at all, given the run that we've had. I thought it was fine, and I actually think the bank earnings have not been bad. They've been okay. They just don't know what this quarter is going to be like, and that's the data. When Dan talks about data, the data we want to see is what does Main Street, what does the economy look like in this quarter that we're in? Because that's when we really start to feel the effects of what's happened.
Yeah, certainly, because so many stores really shut down in March or will be shut down, and Bed Bath & Beyond offering no guidance. The stores are shut. I'm not sure what numbers those are going to tell us.